Hi, good morning, everyone. Thank you for joining us for today's weekly market call. Today, we have a few stock counter updates, which includes Alphabet, Amazon, SGX, Capitaland and Ascott, Starhub Bev, and Manulife US REIT, and Hutchinson Port Trust for Phillip on the ground. And for the technical pulse, we have STI, S&P 500, Longfu Spring, and Olam Group, and as well as for the usual SU Weekly. So today we'll begin with Paul first. So Paul, please.
Yeah, thanks. So, next slide. So I'll start with Starhub and then move on to SGX results because I'm not sure if because Glenn is in the DBS briefing. So let me just start off with Starhub results. So as the title suggests, it will be another year of heavy investments. I think what we have seen is that although revenues are strong, but they had to incur huge amount of expenses as part of their transformation program. So in terms of the results, it was within our expectations because they already guided it will be a weak quarter. So if you look on the left, you can see that revenue is up 14%, but their EBITDA is down 18%. So obviously, the thing that hurt them the most is actually operating expenses, which is up 20% or 19.9%. So for the positives, the mobile revenue was actually strong. It accelerated. Sorry, this is supposed to be fourth quarter. Sorry for the typo here, but the mobile revenue accelerated by 13% year on year. So this is the strongest since FY05. In terms of the negatives, there was a surge in the operating expenses. Sorry for the error on the left. The operating expenses jumped 35%. And what they are spending on is the repairs and maintenance, marketing, pay TV content costs, and actually there's a major revamp of their IT system, so they have to incur new software costs and they have to remove some of the legacy costs. The other thing, there was a drop in dividends by 22% to 5 cents. So in terms of the outlook, we expect another lackluster year in 2023. To just give you a sense, so under this so-called DARE plus restructuring, they spent like 75 million in FY22, but in FY23, we think this will more than double to 180 million. So this will be another FY23 will be another year where to offer heavy expenses and also capex. The capex is expected to double from 160 million to almost 320 million. So we downgraded to neutral with a lower target price of 108. So we just peg it to 6.5 times price to book. So at this current juncture, we just don't find the dividend yields probably around 4+% attractive. As you know, investors have to weather another year of weak earnings. Next slide. So for Thai Bev, a slow start to FY23. Next slide. So for Thai Bev, they gave a first quarter or December quarter update. There's no analyst briefing or details. So what they only release is revenue and EBITDA, and that's it. So the numbers were a tad below our expectations because December quarter typically stronger, usually around 30% or so in terms of contribution to the full year revenue. There was a rebound in beer revenue. So you can see the table on the left, the revenue was up 14%. Although volumes was only up 4.5%, so most of it came from price increases. But they did mention in the Sabeco, so just to refresh, Thai Beverage has the Chang beer in Thailand, and they also have Saigon beer in Vietnam under the biggest brewer called Sabeco. But Sabeco in Vietnam did guide that the macro for the next maybe 2 quarters might be weak. Because what they've seen is that this was a piece of news, I didn't catch it myself, but in Vietnam, there was a lot of shutdowns in the business park. So a lot of manufacturing activity and a lot of retrenchment is happening in the business parks because of the slowdown in manufacturing. This is mainly in textile, footwear, and so forth. So as a result of that, management is just a little bit more cautious for the next 2 quarters because Vietnam's undergoing a very soft macro conditions. In addition, as you know, there's a bit of a political change there, and that also kind of paralyzed a lot of activity, property activity, because as authorities will be afraid to approve anything. So Vietnam, there's a bit of a speed bump happening right now for the country. So for the negatives is the spirit volumes. They were because spirit volumes was down 15%, but this partly was because a year ago, last year, there was a lot of front loading of volumes ahead of price increase. But even if we take that out, it's still quite slow actually, the volumes for spirits. Spirits is basically like 80% of Thai beverage profits. It's basically rum made out of sugarcane. In terms of the outlook, I think first quarter was tough because of heavy comparables. But again, excluding that, it's still a decline. And what we think is that the margins is also getting weak because they are bulking up on their marketing spend to boost brand building. So if you can recall, like 2020, 2021 during the pandemic years, they cut a lot of expenses, especially marketing, in view of the pandemic. But I think there might be a bit of catch up here, so that might be a drag on margins. So we downgrade from buy to accumulate. Our target price is unchanged. So the downgrade is mainly because of the share price performance. We kept our earnings intact, and we still do think there is a recovery in earnings because there's no reopening of borders in Thailand. It's a bit of event-driven spending from the election, which typically happens. The election should be in May of next year, and a general improvement in economic conditions, but predominantly in Thailand. Next slide. So I'll move on to Singapore Exchange on behalf of Glenn. Next slide. So for Singapore Exchange, what you see is basically their futures business is doing well, and the FX business. So the futures business is like, your China A50, Nifty, the futures market. And then the OTC business is also performing well. This one is harder to track because, it's not something visible for most of us, but it's basically, a FX business that is over the counter, that means conducted by banks directly. The other positive was the treasury income jumped. So for the year, although the headlines is up 30%, but the underlying profit is up 7%. Because what most of the big jump that you see is actually some of the unrealized gains, and there was an acquisition that they make that they claw back the purchase price because the acquisition it didn't hit the profit forecast. This is called the earn out clause. That means if they don't earn the earnings according to the agreement when they acquire the business, then they can claw back some of the purchase price. Of course, weakness is equities, as I think this one all of us are familiar with. And also data connectivity. I mean, when the market is big, I don't think they're going to get much connectivity or people trying to sign up for more indices, pay for index data as a data provider. So for us, I think we still have a buy with an unchanged target price. Mainly, we think interest rates will still drag up the earnings. So treasury income, if you look at the very first bullet point, actually almost doubled in the first half, and we think it should continue because of rising interest rates. So how SGX generates income is they will collect, I think, almost 13 billion of collateral balances from all the clearing members. Most of it they will pay back from the short-term rates, but when the yield curve is up, when the yield curve is up, then they will actually earn the extra because they only pay overnight money or overnight rates to the members, and anything extra actually goes to SGX. So they're almost like a bank, but of course not as much, but they do get that free float. Next slide. Next slide. So I'll just run through our tactical views. There were not much macro data for Singapore. The one that was rail and many a comfort thing. So for rail in January, it continues to grow strongly, 28% year on year to 1 million passengers per day. And then in December was about 32, up 32%. A point to point, which is basically taxi and ride hailing, was surprisingly weak in December. I'm not sure why. Maybe there were more outbound travel, but it was down compared to November, and most of it was from street hail, which is basically taxi, and ride hail is basically flat. The other point to note was also the data point that caught our attention was exports data, which is from Korea. So exports out of Korea continue to slide. It's down 16%. It's contracting faster than last month. And we also see a similar situation in Taiwan, which is contracting even larger, 21%. So what we see is that global trade or global growth is slowing down, especially manufacturing. And it's also confirmed by the latest data point we get from the US. So in terms of the imports into the US, what we look at least for volumes, is the amount of containers that go through the port of Long Beach in California. So this is down almost 30% year on year. And again, it also follows on December. So the import volumes into US is sliding down very fast. So that's why it will hurt a lot of the goods sector, electronics, or even like furniture and so forth. The other thing that came out, I think, was all over the news is basically there were two major Fed official speaking. Of course, Powell, and the other one is the New York Fed Williams. So basically, they just said that they're just going to maintain interest rate for a few years, and they will keep restrictive for some time. In terms of our tactical views, the most important will be on Valentine's Day tomorrow. So there will be the US will be releasing the January CPI. So we still think that the CPI will continue to slide. I think more so for February and March data, which is more next month when they release the data, because you're going to compare against the hot commodity prices a year ago when the Ukraine conflict was starting to brew. So we think all this could still trigger this so-called mini soft landing trade again back in the US. Once it's confirmed again that the CPI continues to slide. Of course, on Valentine's Day, we also have the Singapore budget, but usually the budget has a benign effect on the stock market. The other positive, of course, the DBS results was better than expected, and it will set a positive tone. Just to give everyone just some headlines of the DBS, I think more details after Glenn's briefing. But in the fourth quarter, DBS profit was up 70%, to 2.3 billion. I think the market expectations was probably about 2.1. So the first point, they beat the expectations. The second point is they gave a special dividend. So excluding special dividend, DBS dividend yield will be about 4%. So the special dividend is 50 cents. So the full year dividend is $2. The third point is that I think the next 2 quarters, you're still going to enjoy strong growth for DBS. Because what happens is that they exited the year with a net interest margin of 2.1. But if you look at the first quarter and second quarter of 22, was only 1.4, and the next was, I think, 1.4, 1.5. So at least for the first half of next year, you're still going to get this huge year-on-year growth for DBS, especially from the net interest margin. And again, just a reminder, all this goes straight down to the bottom line. Because when you have higher net interest margins, it doesn't there's very little extra cost. Okay, then in terms of the weeks ahead, of course we have the main one will be Singapore budget and US CPI, and we have some of the events more on the REITs and so forth. Next slide. Okay, so this is just an illustration. I mean, it's quite a depressing picture, but I mean, this is just an illustration of the slide in export. So global trade is sliding fast. So you shouldn't be surprised if electronics also will be very weak. You can see on the left here, this is, because Taiwan and Korea are, of course, the biggest electronic exporters. We also see the imports. I mean, this is the amount of volumes going through the port of Long Beach in California on the West Coast. So that is also down 30%. So that, of course, we had this big jump in 2020 when the pandemic happened. Then I think we probably over-ordered, and now there's a bit of inventory. They are all cutting back the inventory. Next slide. So so this slide we just wanted to because oil price for last week rose the highest in 4 months. So the oil price is something from a macro standpoint, is something that we monitor very closely. We consider this like a simmering volcano, because if oil price for whatever reason, geopolitics or so forth, really spikes up again, then virtually all bets are off, because what it means is that you can expect the US CPI to spike up, and we're not sure how much more the Fed. There's almost no end to how much the Fed will raise interest rates until the whole economy falls into recession. So it's just something to monitor. Oil price, that it just moves along more sideways, so that's fine. But any major spike in oil price is going to be a problem for the whole for all equity markets. So the table on the left is just to show that one thing good in in production is that US actually managed to raise production by 500,000. So they're the one kind of balancing the market. As Russia said, they're going to cut 500,000. The other part we always like to use is also the inventory, which is the blue line. So when the line goes down, it actually is an inverse. So it means that inventory is climbing back up. So the blue line shows that inventory is starting to build back up in the US. So that is what also helping to pull the prices down, which is the red line. Next slide. This is my last slide. So this is our Phillip on the ground we had with Hutchinson Port. So Hutchinson Port, they own ports in China and Hong Kong, but the biggest revenue for them is Hong Kong and Shenzhen. I think you can see from the map here. So for the results, it was poor. I think PATMI is down for the year, down 40%. the volumes in the second half was also down 14%. But what looked interesting was that they generated almost 5 billion of cash flow. But out of this 5 billion, only 1 billion is paid for dividends, and the dividend yield is now about 9%. The balance 2 billion which is a bit high actually, to pay to the minority interest. So because most of these ports, they don't own 100%, they own 50%. So as a result of it, they actually have to pay the other side, the minority, and 2 billion is to repay debt. So they have more than enough free cash flow to pay the 1 billion in dividends, or 1.3. And the thing is, most of it they use to wind down the debt, which is already dropping down to about 17 billion. So in terms of outlook, they're trading below book. The only thing is that so they have huge cash buffer to sustain this 9% yield. But just that I think first half you should expect the weak numbers, because first the volumes were still slight in the first half, and in the first half they are not earning storage income. So what happened is, during the pandemic, when there was a lot of lockdowns, a lot of the containers were stuck and then in the ports, so they managed to charge a lot for storage of these containers. But of course, now that the supply chain is normalized, so they're going to lose some of this. So on the second half of 23 of next year, according to the trust at least, they think that they're a bit more upbeat, because they think the US inventories will start to replenish. So the volumes will start to pick up again, the imports from the US, and then the China reopening. Again, this is their view. Yeah. Next slide. So I think that's it for me. I have to rush off for a meeting. So thanks, everyone. Yeah.
Thanks, Paul. Good morning, everyone. So I'll be sharing on Alphabet's fourth quarter 2022 results with the title Focused on Reducing Expense Base. Next slide. Yeah, so overall, the fourth quarter results were roughly in line with our expectations. In terms of fiscal year 2022 revenue and adjusted PATMI, this came in at 99% and 100% of our forecast. One reason why we use adjusted PATMI is because we kind of want to take out some of the one-off gains or losses, especially with Alphabet. They've got a huge fluctuation in the other income, which is actually unrealized gains or losses in debt and equity investments. So we kind of just want to take it out to normalize everything. In terms of revenue for the quarter, Alphabet generated $76 billion of revenue. So that is only a 1% year-on-year growth, or 7% in constant currency. So there was a 6% FX headwind for the quarter. If you break it down into its two main segments, services, which is predominantly advertising revenue, or like 95% advertising revenue, was down about 2% year-on-year. And this was largely due to significant pullbacks in advertiser spend that have been continuing over the last 3 or 4 quarters. The other segment, which is cloud, which makes up about 10% of total revenue, this cloud revenue grew about 32% to about $7.3 billion. So it still remains the company's fastest growing segment. But growth has come down quite a little bit, from about 40+% to 32% year-on-year for the quarter. The key highlight for this past quarter's earnings would be similar to most other big tech companies, would be slowing expense growth. So actually, Alphabet I actually spent a lot of time talking about expense growth for this year and for next year. So for this year, they do expect capital expenditure to be roughly in line with last year's levels. So if you think about it, on a year-on-year growth, it's just flat. And this comes as it's trying to kind of consolidate some of its office facilities. I guess balancing closing its office facilities and while still actually investing slowly in some of its technical infrastructure, like data centers. At the same time, Alphabet also mentioned that they were going to be reducing about 12,000 jobs in the first quarter of this year. So this represents about 6% of the workforce. And it'll remain largely very selective when making investment decisions. So it's kind of gone from a mindset of spending to grow to kind of controlling and improving operating efficiency. We do expect this year's operating margins to be largely, quite similar to last year's, mainly because um, the company actually expects some consolidation and severance related charges. So these charges will expected to amount to about $3 billion US. But we do expect margins to expand a little bit more meaningfully in 2024 as these charges go away, and especially as because a lot of their commitments are actually long-term commitments that last 1 or 2 years. So it's a little bit more difficult to start cutting, or rather, if they start cutting now, you don't usually see it until at least a year after. And so that's what we expect to see in 2024. In terms of the main negative headline earnings missed, mainly due to advertising demand weakness, some inventory charges amounting to about $1.2 billion US, and $1.5 billion US unrealized loss in debt and equity investment. In terms of outlook, we still do think that margins have largely reached the bottom, and we do expect this margins to kind of expand moving forward. If not this year, at least definitely in 2024. We see YouTube Shorts continuing to gain strong momentum. So right now, YouTube Shorts, which is Alphabet's short form video platform, is seeing more than 50 billion daily views. Compare this to the first quarter of 2022, where it was only about 30 billion. So it's seeing quite strong engagement growth. At the same time, monetization on Shorts is also increasing, which is good news because it still lags monetization of long-form video and just your print ads, or rather normal digital ads, quite significantly. And so as Shorts kind of gains more momentum and it gets more popular, it actually is stealing away revenue growth from other segments because it just doesn't monetize as well. But we're hopeful that monetization will reach similar levels to other digital advertising platforms, hopefully sooner rather than later. We do think that it is the multi-year process, but at least they are making some progress on this. In terms of valuations, we cut our fiscal year 2023 revenue and EBITDA forecast by 9% and 17% respectively. We do also cut CapEx spend for this year by about 20%, to be more in line with 2022 levels. However, we still maintain a buy rating with a raised target price of $131 US, up slightly from $124 US, because we still do see significant upside from increasing Shorts monetization. We do also think that Google Cloud still remains very strong. Growth may not be 40+%, but it's still growing at very healthy levels of 30+%. And we also factor in margin expansions in 2024. We still maintain our weighted average cost of capital of 7.3% with a growth rate of 3.5%. So that's all for Alphabet. I'll hand it over to Max for Amazon. Thank you.
Thanks, Jonathan, and good morning, everyone. We recently published a report on Amazon's fourth quarter 2022 results, and the report is titled "Longer Term Remains Attractive." Next slide. Yeah, so overall revenue was in line with our expectations at 101% of our FY 2022 forecast, but adjusted PATMI was a slight miss at 96% of our forecast, and this adjusted PATMI actually excludes the $12.7 billion US loss from the investment in Rivian. So for the fourth quarter, revenue came in at $149 billion US, which signifies a growth of 9% year-on-year. Or rather 12% in constant currency. And PATMI came in at $278 million, and this includes the $2.3 billion loss from the Rivian investment. So for the positives, firstly, the fourth quarter revenue beats the top line of company guidance. And as I mentioned before, revenue grew at 9%, and this is above the $148 billion US guidance that was offered by Amazon at the end of the third quarter. The strong performance in revenue was mainly because the retail sales were boosted by the first ever Prime Early Access sales that took place in October, and the Thanksgiving Cyber Monday holiday weekend sales also outperformed the company's expectations. And I would like to also note that Prime also saw record new sign-ups during the launch window of the Lord of the Rings show when they release the series. Then AWS remained the fastest growing segment by growing where it grew 20% year on year to $21.4 billion US dollars. And the cloud computing segment still remains as the sole contributor to the fourth quarter's operating income as well. Second positive is that Amazon advertising business continues to buck the industry trend. So advertising revenue grew 90% year on year to $11.6 billion US dollars. And this actually makes up around 8% of fourth quarter's revenue. The advertising revenue actually grew despite competitors, other companies like Meta and Alphabet experience advertising revenue decline. And this means that Amazon continued to see inflow of advertising demand from brands, sellers, and vendors, despite them having a more frugal stance on their marketing budgets because of the macro environment. However, in terms of the negative, Amazon expects the first quarter 2023 AWS growth to decelerate. And this is because in the month of January, Amazon sees the AWS revenue growth to be in the mid-teen percentages. And this actually is down from the 20% growth that it experienced in the fourth quarter. The deceleration mainly comes from the fact that enterprises continue their spending optimization efforts, whereby they opt for lower cost products because they feel like they don't need as much computing power as however, and management expects these optimization efforts by enterprises will continue to be a major headwind for at least the next several quarters. However, Amazon indicated that the new customer pipeline for AWS remains robust, and that many companies are putting plans in place to migrate to the cloud and commit to AWS in the long term. So we would like to also note that during the fourth quarter, Amazon incurred a $2.7 billion US dollars charge. And this mainly comes from three areas, which includes the employee severance costs following its announcement of the layoffs that affect 18,000 employees, the impairments of PP&E and operating leases as the company reassesses its physical store portfolio, and it decided to close some stores that they feel it does not have a high potential for growth, and it also incur a higher reserve for insurance. So in terms of the outlook, Amazon guided for the first quarter 2023 revenue to be between 121 and 126 billion US dollars, which signifies a growth of 4 to 8% year on year. And FX will continue to be a headwind of around 210 basis points or 2.1%. And during the call, management also indicated that management reiterates that groceries remain one of Amazon's key strategic areas for future growth, but it is pausing the expansion of the physical store footprint for Amazon Fresh, as the company is currently doing some slight experimentation as they are hoping to find the physical store format that can resonate better with the customers. And the management also said that they will continue to expand the presence of the Amazon Fresh stores, physical stores, when they have found the differentiation from the competitors. So in terms of our valuation, we upgrade our rating to accumulate with a raised target price of $117 US dollars, with using a DCF valuation with a WACC assumption of 6.4% and terminal growth rate of 5%. We upgrade to accumulate, although we expect near-term revenue growth challenges because consumers are still being careful with their discretionary spending and AWS customer opting for lower cost product. We expect revenue growth to re-accelerate in FY24, and particularly for AWS, because Amazon is expanding its client base right now, and we expect these customers to opt for more premium products premium products when they need to increase their computing demand as the macroeconomic environment improves. So that's all for Amazon. Now I would like to hand over my time to the rest of my team. Thanks.
Okay, thanks, Max. So for Capitaland and Ascott Trust, their results were in line with our forecast. So for gross revenue is up 69% year-on-year, amid higher revenue from existing portfolio and the contribution from some of the acquisitions that they made. And their gross profit margin is also higher on the back of better cost savings. So the distribution income was up 54%, even though they paid out $45 million in divestment gain in FY21 due to the stronger performance in the hospitality sector and the higher RevPAR. So for the positives, fourth quarter 22, the RevPAR, it grew 78% or 17% quarter-on-quarter, year-on-year, quarter-on-quarter to 155 Singapore dollars. So this is the pre-pandemic high, pre-pandemic 4Q19 levels really. So it's really back to the normalized levels due to both higher ADRs, which is the average daily rate, which is up 37% year-on-year, as well as higher occupancy of 78%. So this 78% is since COVID is the highest really. So year-on-year, last year it was at 60%. Now it's at 78%. For Singapore, Australia, US, and UK, the RevPAR is really at or above pre-COVID levels. And the management guided that there is still growth potential in the markets that are still lagging, which is China, Japan, and Vietnam, which are about 80% levels of 80% of pre-COVID levels respectively. So the issue with a lot of REITs now is that the portfolio valuation is declining, but for Ascott, Capitaland and Ascott Trust, their portfolio valuation managed to remain stable despite the higher cap rates and discount rate used across most markets. And with the exception of Japan, because Japan is still seeing the cap rates are still contracting. So across most markets, the cap rates are up about 25 to 50 basis points on average. And Ascott managed to offset this increase in cap rates by better operating performance and the future performance of the assets that they own. So another positive is that Ascott has 78% of their debt on fixed rates and is locked in for 4 years. The cost of borrowing for the quarter is still very low at 1.8%, and the management expect that this cost of borrowing to increase by 25 basis points for the full year and to end the full year at about 2.05% after they refinance their 14% loans that are due this year. So for the negatives, the strong Singapore dollar continues to impact the DPU for Ascott. The impact of the FX on their gross profit was 2.8% for the full year 22. So for the outlook, forward bookings are still very strong. And we are positive on the recovery, especially for the China side. So in 2019, the Chinese travelers, they contributed about 9% of CLAS guest count. Well, last year, only 3%. So we expect this to pick up in the second half of 2023. So right now, the issue with these Chinese tourists is that there are not many bookings, even though there are many inquiries. So we hope this will pick up later end of this year. So with that, we maintain our buy call on Ascott with a target price that is raised from $1.13 to $1.26. We raise our DPU estimates by 1 to 3% as we roll forward our forecast, and the current share price implies a FY23 estimated DPU, a dividend yield of 5.9%. So next for Manulife US REIT, they released their results last week, and at the same time, we also hosted them for a TR exclusive webinar on Friday. So these are just some highlights. Manulife US REIT has a market cap of 500 million. It is a pure play US office REIT. So for the second half 22, the distribution income was down 1.7% year-on-year to 41.9 million. However, the DPU was down 10.3% to 2.36 cents, and it's down even more 18.6% to 2.14 cents when you account for the fact that they did not distribute 100% of their dividends. So they had a 91% dividend payout ratio, so they maintained 9%. And at the end of the year, they had a portfolio occupancy of 88%, and their portfolio WALE is 4.7 years. So right now, their capital on the capital management front, they are 77% hedged to fixed rate loans, and their gearing is at 48.8%. So this gearing level suddenly so high is because of the devaluation of their asset properties. And even if they exceed this 50% level, which is the MAS, the regulations, if your ICR is above 2.5 times, you can have your gearing up to 50%. So in other words, they are still in line, but because by the MAS, the rule is if you breach this 50% because of asset devaluations, you are not considered to have breached any covenants or whatsoever. You are still okay, just that you need to bring your gearing down. And the only thing you cannot take any more loans as well, but you can refinance your existing borrowings. So of course, the goal is not to maintain your gearing at so high levels, is to bring it down back to 45%. So the options that Manulife US REIT are looking at is to prioritize disposition of assets. Right now, they're in talks with their sponsor. Maybe they are possibly going to dispose some assets to the sponsor. But then, while they are prioritizing disposing of assets, they are not willing to dispose these assets at a steep discount to book value, as they do not want to crystallize loss. Like for example, if you just sell your asset right now at like 50% discount to book value, you are locking in the loss and you cannot get that loss back. And right now, they also mentioned that equity fundraising to bring down gearing is unlikely as of now. So one thing that I've heard at is that right now Manulife's cost of debt is 3.74%, is up almost 1% for the full year because of the Fed, the rising interest rate environment. Like last year it was 2.82 and this year is 3.74. So for the valuations, it is like what they mentioned at the end of last year when they gave out the notice, it is down 10.9% year on year or 237 million to 1.95 billion. But the key thing is that is the three submarkets, LA, New Jersey, and Washington, accounted for 80% of the portfolio decline. Like these three submarkets, they came in at double-digit declines. Especially the biggest one was a 33% in the LA market, like Figueroa building. And the other submarkets saw a 3 to 7%, but most of them is around the 3% level decline. And for the strategic review that they announced end of last year, they appointed Citi as the financial advisor, and right now they still have more updates to come because they signed a lot of NDAs and nothing is public news yet. So yeah, we just have to wait until the second quarter updates. And for the outlook, they mentioned that their physical occupancy at their portfolios is at about 30%, and this is likely to have bottomed out already. So they're looking at maybe 60 to 70% physical occupancy going forward. That is the kind of normalized levels. And on the rental reversion front, they are expecting low single-digit rental reversions going forward in 2023. And right now, considering the full year FY22 dividend payment, Manulife US REIT's dividend yield is at 16.3%. So that's all for me. I'll hand over time to Zane for technical pulse.
Thanks, Darren. Good morning, everyone. So I'll be talking about the technical analysis section. For Straits Times Index, we look like we're possibly in a potential bullish Fed consolidation after the breakout a few weeks earlier. So for now, the immediate resistance we're likely to see at the 3,390 level, which was rejected last week. And then it can stretch to about 3,470, which was the highest made in last year. As for the immediate support wise, I think the strong support will be around the 3,300 level, should we drop down to that level. Since it was the previous neckline resistance that we found it very difficult to clear, and support will likely to stretch to about 3,350, which is the trend channel resistance for the trend channels labeled in red and blue in the chart. So that's for the STI. Next slide. For the S&P 500, last week we came back below this 4,100 level that we broke out of, and then we also came back below the trend line support for the short-term uptrend. So for now, I think we could see some form of consolidation taking place with the immediate resistance at 4,100 to about 4,200. Support we can see at about 3,890 to 4,020. So 3,890 is the swing low that was created, I think, in the mid of January before the index went higher. And then 4,020 would be the recent swing low that we actually was supported at. So that's for S&P 500. Next slide. So for individual counters wise, there's two of them. The first one being Nongfu Spring Co Limited. So for this, we have the technical buy at $45.20, take profits at $40.35 and $52. The stop loss can be placed at $43.75. This stock last closed at $43.15, so it hit our stop loss and the trade was invalidated. So for Nongfu Spring, last week there was a potential breakout of this consolidation triangle that was taking place to retest the uptrend channel as well as the previous swing high resistance at $52. This was because the price has actually consolidated in a triangle and it was forming higher lows recently, which was a potential bullish signal for a breakout. And also the MACD was displaying a bullish momentum with sustained crossover of the MACD line over the signal line, while both of them remaining above the zero line. So in my next counter will be Olam Group. So for this, we have a technical buy at $1.55. The take profits can be set at $1.63 and $1.69 with the stop loss at $1.50. This stop loss closed at $1.54 on Friday. So for Olam, we see a potential continuation of the uptrend to retest these two resistance levels. The reason being the price has been trading in an uptrend channel recently. And on 9 February, we saw it form a bullish hammer candle at the channel support area, following a pullback from the 163 resistance area that it was tested multiple times and we couldn't clear. So if we found support at this place, we could see continuation of the uptrend to retest this 163 level first, and subsequently the 169 resistance level should a breakout occur thereafter. So the 169 level is the next swing high, which was formed in April of last year. So that's all from me for the technical section. I think I'll now pass on my time to the rest of my colleagues for the Q&A.
Yeah, hi. So a lot of our colleagues are not here. So if you have any questions for Paul or Terence, maybe we can wait until next week for them to answer. Sorry about that. So for I'll answer some of the REIT questions. Yeah, so please comment on Capital China, FA and TA. So for the TA part, I will leave that to Zane later. But for the FA part, Capital China Trust, they are still very heavily denominated in retail assets, even though they expanded their mandate last year or the year before. So because of the lockdowns last year, their results for last year wasn't that good, and they had to pay some rental reliefs to help offset the impact of the lockdowns and the slowdown in the retail side. But going forward, we see that the shopper traffic and tenant sales are creeping back up as of January and February. So we believe there is a bit of comeback there, but we do not cover the stock, so yeah, we do not have any target price on that. Yeah. Yeah. So that DBS and the SGX, we'll wait for Glenn to answer probably next week. Not sure if you'll join the call because he's in the DBS meeting right now. Yeah, there's a question on Sheng Siong. That one also I have to wait for Paul next week. Keppel Corp as well, but of course all these if you want to ask for TA, can ask Zane to help out. Raffles Medical as well. Yeah. Or if you have any burning questions that you want answered quickly, you can drop it in the P3 app, and the analyst will answer the questions. Please comment on Sabana tender offer. Yeah, so Sabana, they issued a tender offer, not a partial offer at 4 46 cents, 46.5 cents. Yeah. So I gave a briefing about it last week. So actually, this Vola group, they are looking to enter another 10% additional holdings into this Sabana REIT. But then it is this price is more fair than what ESR actually wanted to take over a merge with Sabana for 2 years ago or in 2020. So right now Sabana is, if I'm not wrong, trading around 40 cents or 42 cents. Yeah. But so at this offer at 46.5, I think it's worth to yeah, probably tender. Yeah, that's my point of view. No update on Prime or Core. Yeah, I'm on Prime right now, so sorry for the delay. We'll update on Prime within the next few days, and we'll have a briefing on it next week. Yeah, and for Core, we do not cover. Oh yeah, so sorry about the Prime US REIT. Yeah, still doing some adjustments. So sorry for the delay. We'll wait for next week. And okay, given the current situation Manulife US REIT is facing, would you rate it as a buy, hold, or sell? I still have shares in my portfolio. Right now there is no secret that they are undergoing some it's a challenging time for the US some of the US office REIT space, because inorganic acquisitions is basically not happening because there are not many transactions still in the market, and the cap rates are all expanding, and the sellers are unwilling to let go at a discount as well, all the properties. So inorganic growth is not there, and for organic growth, the occupancy and a lot the companies in the past few quarters were downsizing, so the occupancy of a lot of the assets are dropping or dipping. But going forward, we think that this will likely flatten out already. We don't think that there'll be any more slowdown or any more that many more downsizing or tenants leaving their space, because there are some one of the REITs also mentioned that some tenants, they downsize too much and they're actually looking to get back some space. Yeah, so this downsizing might have been overdone as well. So even though the outlook is still challenging, I wouldn't say that it's a sell, because right now it's still trading at very depressed levels. I think Manulife is at 30 cents, if I'm not wrong, 29 cents. Yeah, and their book value is still about 0.5 times book value, if I'm not wrong. Yeah, and can you explain on Manulife in your presentation is non-rated, and in your Phillip Analytics, the TP is 46 cents. So this is actually based on the last target price that the previous analyst did. That was last year. So yeah, we need to update that. And there's someone who says no audio. I'm not sure whether it's me or is your system. Can anyone let me know if my audio is working in the chat, please?
It's fine there.
Oh, okay. Thanks, John. Okay, thanks, Dave. Thanks, June, for letting me know. Okay. Right now, I think I'll hand over to some of my colleagues. There are some other FA questions before we hand over the most bulk of the questions I see are all TA for Zane. So I think there's a question on Google versus Microsoft. Not sure if you can take that, John.
Yeah, I can take it.
Yeah.
So, Yeah, so there's a question here. What is your view on Google versus Microsoft with respect to AI, how this would affect Google's future? So I assume you're talking about OpenAI versus Google's own AI bot called BART, B-A-R-T. Essentially, AI, just I guess some backstory, AI isn't anything new with respect to digital advertising. Google and Microsoft, or at least Google for sure, has been using AI for quite some time now. Whether it's I mean, it hasn't really been on a large scale, but it has been helping in terms of digital advertising and targeting and all that. I guess personally, from our point of view, there's been this talk about how OpenAI may and Microsoft may take over digital advertising and web browsers and stuff like that. But for right now, Google's Chrome browser is still the predominant browser that everyone uses. They've got, I think, 80+% market share. And it is also a little bit difficult to see how AI, at least at this point in time, will benefit Microsoft to the extent where they would be able to compete aggressively with Google in terms of digital advertising. I think there's still a long way, at least in terms of not even digital advertising, but just browser usage, web browser usage. There's still quite a big disparity in terms of what people want to use and which browser is actually being used by consumers. So we don't think it will really introducing, I guess, another competitor or a better AI system wouldn't really be that detrimental to Google's advertising business as of now. The other problem with OpenAI and Microsoft's other AI capabilities is that they're still not able to really scale it to the level where it has to be. So right now, a lot of it seems to be a lot of gimmicks, like you use OpenAI to write your essay for you and stuff like that. But when we talk about these kind of large big tech companies, you really need to be able to scale these kind of technologies globally, not just within a certain region, but you have to scale it globally. And right now, I don't think that Microsoft has the capability of doing so. And so I guess those are my 2 cents on it. Yeah, if you wanted to go and check out OpenAI, I don't think you'll be able to use it for a while because it will say that it's currently full at maximum capacity. Yeah. So long story short, we don't think that this will really affect Google's future significantly. Yeah. Thank you. I think that's all for US big tech. Yep. All right, I'll hand it over to I guess Zaid or Darren. Yeah, you can take over.
Thanks, let me take on a few more questions. Daiwa Logistic REIT, do you see going back to IPO price of 80 cents? Oh, for that, we actually don't have coverage, and I'm not very familiar with the Daiwa Logistic REIT, but they are having their results out later this week. Probably you can drop me a message if you want to know more, or can ask the same question next week. Yeah, but if you ask me whether it's ever going back to IPO price, I really can't comment on that. And there's a view on CICT on its price trend. View on CICT on its price trend last week. I think is this not sure if this is a TA question. Let me check what's the share price trend actually. Probably it dipped a bit, I think, after their results at the end of 2 weeks back, after recovering quite strongly as of end of last year. But for the FA side, for CICT, they are still doing quite strong. Like the retail portfolio is still strong, like the tenant sales and all this, and the shopper traffic as well. But for I think the headwind side is more on probably the office, like the office portfolio, because think the price, the office per rent, the square foot I wouldn't say has peaked, but I think that it's quite challenging for it to continue going forward. Because right now, if I remember correctly, it's 1170 per square foot, is all-time high, even higher than the pre-COVID highs. So, and on top of that, going forward, in the second half this year, there's quite a lot of supply coming from the IOI Central Boulevard Towers. So there's over 1 million square foot. So there's some constraints. I mean, not constraints. There are some headwinds on the rental side for the office. And of course, the usual macroeconomic uncertainty and the tenants, whether they're downsizing or all these. But right now, we only see downsizing in tech, especially. The rest, other sectors, not so much, like tech and software companies. Yeah, so that's kind of my view on CICT. Hi, any group view on REIT Global? REIT Global do not have any views, but I remember last I heard from them, they had an issue trying to backfill one of the office spaces in one of the buildings that was vacant. Yeah, I can't really recall off the top of my head. Yeah, but we do not cover REIT Global as well. Yeah, so I think that's all. Yeah, Zane, please hand over to you right now.
Okay, let me share my
Thanks, Zane.
screen now. Okay, so let me begin. The first one is Capitaland China Trust. So I think for now we are still seeing a pullback, like with most REITs currently. So after we hit the resistance here at about 124 to 125, which is also this uptrend channel resistance, we are currently pulling back. Currently we might be nearing a support level at about 112 to about 115 this zone, which was a previous neckline resistance of this bullish inverted head and shoulders pattern over here. And also we are nearing this uptrend channel support also. So this might be, we might find some support over here. Going a bit lower, we might, if it break a bit lower, it might actually go down to maybe 110 over here. There will be a retest of this downtrend resistance line that we broke out of. So over here, we might see some strong support coming in based on confluence of these supports. Yeah, so that's my view on Capitaland China. The next one is Hang Seng Index. Okay, so Hang Seng has been pulling back recently. So things we actually there's this downtrend resistance line that we broke out earlier on, but we are now back underneath it over here. And then there's also, we also broke down this rising wedge pattern over here. So for now, temporarily, we are seeing some pullback correction in the index. So I think the next level for Hang Seng Index could be, the next support level could be around 20.7K, then followed by the about 20.2K over here based on the previous resistance levels, swing high and swing low. And for now, we might be following like a pullback channel over here as well for the index. Yeah. So that's my view on HSI. Okay, then next one, Bitcoin. Bitcoin, we broke down this broadening wedge pattern. So this is quite a bearish pattern. Given it shows that actually there's increasing volatility based on this wedge. Then we actually broke below it last week. So for now, I think the support can range from about 20.3K to 21.6K based on the swing lows over here in the previous consolidation region before it broke up. Then resistance wise likely to be at around 22.3K over here to short term wise to about 22.8 over here since it was a previous support over here. So for now, bearish on Bitcoin could be seeing some range or further pullback for Bitcoin. Okay, let me see the next one. Okay, Singtel. Okay, Singtel, I think for now still remain a bit bearish. Given that there's this long-term trendline support over here. Then we retested it, but looks like we still can't clear it despite breaking out this downtrend channel. So for now, I think we might see some further pullback, possibly retest this trend line support over here. So that will be about maybe 246 to about 248 zone over here. Then there's also this swing lows at around 243 to 244 over here to take note. Then so I expect some further, a bit more downside for Singtel to possibly test these support zones for now. Then some strong resistance for now will be at around 255 level over here. Okay, then Wilmar for now is bearish, given that we consolidated in this range for very long, right? And we actually broke below it over here. So that's a bearish sign. Then for now, the resistance could be around $4, which was this support that has held it for a very long time. For now, maybe if there's a bounce, you could see a retest of this previous support over here. Then I think if it pulls back wise, I think support could be found maybe at 385, the 50% Fibonacci level, when you take the lows out at 346 to the high at 424. This 385 level will match these swing lows created last year November around 385 to 8388 over here. Then further pullback, we could see maybe 375 or 376, which is this opening price of a gap up last year. So that's my view on Wilmar. Apple Corp. And Apple Corp, pulling back after the results, then we also currently below the swing low of $7.11 over here. So if we see further if we see some further pullback, I think we could see some support nearing maybe 680 to about 690 zone over here. So that will be this black horizontal line, previous resistance, and we found support over here, so that you might find some support over here again. And this red color trend line support, we could retest it over here as well. So this will be a double support region for Keppel. I think for now, if we can't hold above this, if we can't break through above this swing high around 714 and reverse back up, then I think we'll see some possible further downside. Yeah. Next one, Ascendas REIT. So Ascendas, unfortunately, we're still facing a lot of resistance near this 290 mark. Tested it multiple times and couldn't clear it. So we're pulling back. For now, we retested this horizontal level that broke out from at 275. So let's see whether we get some support over here. Another level to find support with this trend line over here. So that's, you could find maybe support at about 272 to 275 temporary for now. Yeah. So that's for Ascendas. And Keppel DC. Keppel DC also pulling back. So this uptrend channel is something to take note. After we actually shot above it, and we're coming back down again. So first, currently now we are retesting this previous resistance at 198 over here. See whether we hold. The next level to take note will be around this swing high at 193, then followed by 185, 186 over here. If we do pull back down right to the bottom of this trend line support. So for now, for Keppel DC, I think possible some further pullback, given the selling momentum for now. Yeah. DBS had a good set of results, but market sells off. Any ideas with EA? All right. I think DBS has been the resistance around 3580 to about 3630 has been quite stubborn. So over here we actually broke this 3580 resistance, but we found some horizontal resistance over here that is around 3630 mark. So today after the results we kept up, but it's pulled back over here. Then I think for now it's possible that we see further pullback to at least maybe retest this $35 swing low over here. Then it will be good if we actually do retest this channel support over here. So maybe around here, around near the $35, we could actually find some support for DBS. But overall, still we can still see it's a very nice uptrend channel over here. So I think just some profit taking on the news here. Okay, next one is a Maple Tree Pan Asia commercial. So this one, there was a bullish inverted head and shoulders pattern breakout at around 175. Then we reached a high of 182, which was a horizontal level, key horizontal level. Then we pulled back. The disappointing thing is that we actually broke below this 175 level again. So I think we could see some further pullback to maybe to retest this trend line support maybe at 169, 170 level. Or if we retest a previous horizontal support, then that will be about 166 or 167 based on this horizontal support over here. So possible some more further downside for this REIT. Okay, then the next one is CICT. CICT also pulling back. We also broke after we hit the resistance of this uptrend channel over here, right, at around 210 over here. Then we are pulling back currently. We could do a retest of this previous downtrend channel we broke out of. So over here, that will be about 193 to 194. That will match some previous swing lows areas during the consolidation around here. So over here, you might find some support at 193, then followed by next support level around 189 or 190 over here. So maybe a bit more downside to at least test this region over here, as with most of the REITs currently. Okay, Genting we're just a lot of sideways movement over here. But the good sign is that forming higher lows while testing the resistance. So this 101 to 102 resistance is still very strong. We tested about 3 to 4 times. The good thing is that the higher lows are being formed at 97 cents, and you see currently looks like $1 is holding for now. So as long as we find some support, continue to find higher lows, and there's a chance that you could see a breakout of this 102. Then which I think the next target could be around 105 to 106 based on this uptrend channel as well as a previous horizontal level. So if we look back in history-wise, there's this swing high in 105 2018 over here. So that could be the next resistance point for Genting if we actually do a breakout. Then for now, it looks like support is at $1. If we do break down, then I think there's a chance that we could actually retest this 97 cents to 98 cents support, which tested twice for Genting. So now a lot of range and just waiting, I think. Okay. This one is venture. Okay, venture, I think for now we look like we are pausing, given that we hit this key level around 1860, which we saw it tested 3 times in 2021 over here. So for now, it looks like could be some form of sideways consolidation for now. Then support-wise, it's around the $18.30 level, so which was the previous resistance over here in August last year. But overall, the trend is still pretty good since the breakout that took place over here of this trend line, as well as breakout of this inverse head and shoulders pattern over here. So maybe just resting consolidation over here. Okay, next one is Comfort Delgro. Okay, CDG, I think sideways movement for now. After we retested the previous support at 121, we found resistance. For now, we're just doing some sideways movement at 118 to about 121 over here. Yeah, so I think that will probably continue for Comfort Delgro. Okay, Raffles Medical. Raffles Medical, I think for the chart looks bullish given that we broke out over 144 over here. We hit a high of about 152 last week. Then currently looks like retracing a little bit. For now, support could be at 144, this level, 144 over here, the level that we broke out of. I think then the resistance wise, the strong one could, for now, 150 looks like there's some resistance, then about 152, then 154. These are some levels to take note. Then 154 was the previous swing high in 2021 also. So it could be some consolidation before some further push up for Raffles Medical. Okay, next. From next looks a little bit tricky. So we actually broke out above this downtrend resistance line and the swing high over here at 168. And reached a high of 175, then it abruptly came back down again. So this could be actually a false breakout over here. So for now, I think some support wise, I think we could see it around maybe short-term support maybe 160, then followed by the strong support over here is around 151, 150 to 151 over here. So I think could be some further pullback based on the strength of the candles over here for next. Okay, next one is hourglass. Okay, hourglass, I think for now, the support is over here. The strong support is over here around $2 mark. Then for now, looks like there's a descending triangle formation that's taking place. So we could either see a breakout at above the 210 level, then the resistance will range from about 215 or 217. Or should we see a breakdown of $2, then I think the next level to take note will be around the 188, 190 level over here. So still waiting for some more for a breakout of this range over here. Okay, any TA on Sheng Siong? Okay, I think Sheng Siong still trending up nicely from the long-term point of view. So there's this uptrend line that stretches from January of last year, still supporting it. So that's still an okay sign. For now, support could be around 160, 162 over here. Then the strong resistance is at 166, 167, which we couldn't clear despite testing it multiple times. So for now, I think we could probably see some further consolidation over here before we could possibly attempt a breakout. Yeah, that's my view for Sheng Siong. Okay, what price to enter DBS UOB OCBC for a long hold? Okay, I think based on technical wise, if you are looking for a short-term entry wise, I think if you do a retest for DBS, if you do a retest of this uptrend channel, that could be a first entry point, given this is one support. And then another support comes from this previous resistance, horizontal resistance around 34.70 over here. So maybe somewhere around this region, maybe you can try to enter some, if it pull back enough. Yeah. And OCBC wise, OCBC is trading in this trend channel over here. If it maybe pulls back to possibly retest this horizontal level around 1250, 1260 over here, that could be a good entry point. If it, yeah, given that this is a previous resistance, then a back test could find some support over here for OCBC. Then UOB for now looks like in this trend channel over here. So if it comes back down the first level around 29.80, then about 29.20, these two levels could be something to take note for possible entries, I think, for UOB. Yeah. Okay. Okay, next one, Yang Zijiang. Okay, I think a bit bearish for now. So recently we had this up wave over here in this rising wedge. Then we actually broke down on this on Thursday. So that's a bearish sign. And then that was after we hit the resistance of this downtrend channel as well at about 132, 133. So for now, I think some support could be around 122, 123 over here, which is the downtrend channel support. Yeah, but if you do note, if we break down, I think we could see some further downside to maybe retest the swing lows around here. That's about 118 and 114. Then longer term wise, there's also this uptrend line over here to take note. If it actually pulls back even further. Yeah. Then short term resistance wise, will be at the strong resistance could range from about 126 to about 129 for now. Yeah. For Yangtze Shipbuilding. UMS. Okay, UMS bearish for now. So I think we actually broke below this short-term, this recent swing low support at 116. Then we are just trading lower bit by bit every day. So for now, I think we might be seeing some further pullback to maybe possibly fill these two gaps created last year. So this Fibonacci wise, the retracement, first level retracement is 110, which we hit today. That's a 50% mark. Then further retracement could be seen maybe 104, 105, 61.8% retracement level. So that will be that will fill this gap over here and maybe retest the swing lows created over here in June to July of last year. Yeah, so that's my view on UMS. Yeah. Then Ascott. Ascott trending nicely. Okay, trending upwards nicely still in this uptrend channel. So for now, I think the middle support will be at 105 over here, which was this resistance we broke out of. And it also matched with this trend channel support as well. For now, resistance will be this swing high at 112. Then it stretched to about maybe 115 over here. So over here, we see this 112 to 115 over here is quite a strong resistance for Ascott. Yeah, should price come back to this level, you could see some resistance over here. But overall, since the low was formed in October of last year, I think the chart still looking very nice, trending in this uptrend channel. Okay, let me see what's the next. Okay, Prime US REIT. Okay, I think Prime for now is a pullback. So given that the rally over here was pretty strong, it's natural that we see a pullback for now. So I think we could possibly see some pullback to maybe retest this downtrend channel that we broke out of, as well as this previous horizontal level here around the 44.5 cents level. If it's the Fibonacci 2, I think that will meet a 50% retracement at around 44 cents to 45 cents mark over here. Then you meet with these two supports. Then further, if further pullback, then it's around 42 to 43 cents, the 61.8% retracement level to take. So that's my view for Prime. HST. Okay, for HST, I think for now a bit bearish, given that it was in this rising wedge formation, and we actually broke down below this trend line support over here at around 74 cents. So for now, I think we could see maybe either some range for now or some further pullback. Then for now resistance is around 74 to 75 cents over here. Support wise, I think we could, if further pullback wise, I think we could retest maybe 67 cents over here, which is this support for the range consolidation over here. Yeah. So that's for HST. Then REIT. REIT, let's take a look. Maybe we broke out of this downtrend channel over here. Then we hit a high of 57.5 cents was the previous horizontal support. And then we found resistance over here. Currently, we are doing a back test of this downtrend resistance. So if this holds at around 55 cents, we could see some range form to maybe retest these 57.5 cents. If not, if we actually break down this level, I think we could be heading for 53 to about 53.5 cents. That being the trend line support over here, as well as the previous swing high that was created over here. So previous resistance could find some support over here for REIT. In the next one, Alibaba. In Alibaba, I think currently we are finding some support. So there's this trend line support over here, which we touched today at 121. So there could be some support coming in. But we could be facing some downtrend, short-term downtrend channel over here, where resistance could maybe at 106 to 107 for now. So that's something to take note. Let's see whether we're able to break out this downtrend pullback. If we face further pullback wise, I think the next support to take will be around 96, which is this previous horizontal resistance over here that likely to find some support. So that's my take on Alibaba. Bank of China. Bank of China, we are resting at the uptrend support for now. So that's around 295 over here. So let's see whether we do a back rebound. Then short-term resistance wise is around $3, I think. So $3 is last time it was quite a strong resistance back then in 2018 over here. Then 315, 316 is also another point to take note. Yeah. If we break below this, I think the next support level could be around 290 over here, which is this horizontal resistance created last year. So a back test over here, then maybe you could find some support for Bank of China. Okay, Metro Singapore. Okay, Metro, I think quite illiquid counter, but for now the trend looks like it's a downtrend for now. So support wise, maybe around 60 cents level, then resistance wise could be 65 cents to about 67 cents over here. Yeah, that's my take on this counter. Okay, Hong Kong Exchange. Okay, Hong Kong Exchange, I think pulling back for now, and see. So there's a first level of support at around 330 today, which we hit today. Then the next level of support will be around 318, I think, based on this swing low in December of last year. And there was a previous horizontal support last time over here at this level. Resistance wise, I think short term, we could see around 344, which is this previous horizontal support level, then resistance over here. Then we actually broke down on this level again. So this is a key level for Hong Kong Exchange. Yeah, so this could be the short-term resistance for this stock. Okay, then Tencent. Okay, for now, Tencent a bit bearish given that we actually broke below this trendline support. So there was a breakdown, then retest and down again. So for now, looks like it's either we do maybe a range or to retest this with short-term resistance. So for now, resistance are likely to be around this 394 to about 400 level. And support-wise, I think we have the swing low at 367. Then another swing low support level could be around 355, 356 over here. Yeah, based on this support over here and the previous resistance form over here as well. In line by 2. Okay, by 2, I think after we shot up above this uptrend channel, we hit some resistance around these heights. We have 165 over here. That means pulling back here. Short term, we could be finding some support at 137, which we hit today, which was this horizontal resistance that we broke out of over here. So now it's like a back test. Then another form of support could be this trend channel support. Then there will be a low of maybe 133, 134 over here. Yeah, so that's my take on by 2. Okay, next one, China aviation. In China aviation, I think we actually start to trade outside of this uptrend channel over here. So looks like a range is possibly taking place. Resistance at 108 to about 110. Then support wise, I think we're currently seeing at 103. Then further support downwards is around the $1 mark over here. So for now, I think it's like a range mode over here for now. Then digital core REIT. This one I had a call on it. So I think it looks good because it actually break out this downtrend resistance line. And then I think it's also the broke out this horizontal resistance over here at 61 cents. So over here we had a breakout. Then we did a back test of last week, during last week. So if we continue to find some support near the 60 cents mark, then let's see, hope for a possible rebound to retest this 66.5 cents level, and then possibly maybe 72 cents, which is a previous support turn resistance now. Yeah, so I think there's potential for discounter given the breakout and the back test. Yeah. Then Semcorp. Okay, I'm not sure which Semcorp you're referring to. Okay, never mind. I just go through both of them. Sem industries wise, I think we short term wise we hit some resistance near the 377 level. So this is based on the trend line resistance over here. Then we could be pulling back. For now, there could be some support at 364, which is this horizontal resistance we broke out of. Then the next level is around 356, which is this swing low support over here. Then followed by 348, which is this resistance we broke out of. So for now, I'm leaning towards some pullback for Sem industries. Then Semcorp Marine, I would say it's quite bearish given that we broke below this 139 level, right? Which was a previous resistance over here, then supposed to become support, but we actually break below it. Then there's also this trend line support that was also being broken over here at 137. So that's not very good. So with that, I think the next support will be the back test of this downtrend channel over here at 133 to 134. Yeah, let's see whether we find some support over here. If not, the next level we will go is at 130 to 131 over here, which is this swing low and swing low over here. Yeah. If we do actually come down to this level, I think it's not very good. Then we could be forming a potential head and shoulders pattern over here. Yeah, so that's my take on Sem Marine. Okay, then JD.com. JD, I think we actually broke below this uptrend channel support. Then we also broke below this swing low at 212, 213. But from a Fibonacci point of view, looks like we hit a support for today. That's at the 50% mark at 198. So we hit it over here to find some support at this level. The next Fibonacci level to look at is at 184 to 185, 61% retracement. We should meet with this swing over here, 20th November. The short-term resistance wise will be at 213, this level we broke down off for JD. Okay, SMIC. Not sure whether I can find it. 098. Found it. Okay, this counter looks like a lot of range taking place. So, but possibly just forming a ascending triangle process. And so I think it's like quite slow for this counter. Resistance wise, I think strong ones at around the $18 mark to about 1850s over here. The good sign is that we are forming higher lows and possible ascending triangle taking place over here. So I think as long as this $17 level over here can continue to hold and do a bounce, and that's still a good sign to be bullish. So I think for now, looks like possible consolidation in this space over here for the ascending triangle to play on. My first resources. In first resources, doesn't look very good for now. We had a breakout of this downtrend resistance and we hit a high over here at 164. Then we pulled back quite hard over here. We broke below this uptrend line support. For now, let's see whether it can get back over 155 quickly. If not, that would be a very signal. Yeah. Then support. The next support wise could be around 147 based on this swing low over here for first resources. If you do continue pullback. Macroeconomics. Yeah, I think quite bearish, even the sell-off is taking place over here. We broke below this 223 level, which was a previous support last time. So that's not a good sign. The next key horizontal level could be at, I think, near 206. So wait, let me adjust. Maybe around 208, 209 over here, which was a previous resistance high last time. Yeah. So I think given we break down over here, we could possibly see some further pullback to test this 208, 209 level. Okay, jump far. And Jaffa, I think for now looks like a range. Resistance at 345 is quite strong. Then bad thing is that we broke down 320, 325. So if that continues, you could see another pullback, some deeper pullback to maybe test 295 to 30 cents over here. As a range looks like it's taking place. Then Manulife. Manulife, so we broke out this downtrend resistance line, right? We hit a high over here, 335, 340, then we found resistance. Finally got pulling back. Not very good thing is that we broke below 31 cents or so, which is this previous horizontal support over here. So maybe some further downside to maybe retest this downtrend line breakout and maybe the swing lows over here. So that will be about maybe 275 to 280 level. Yeah. In city development. City development, I think range looks like a very range bound. Found resistance at around this 835 level, the swing high over here, pulling back. Let's see for now whether this short-term $8 over here, this range support can hold it. Yeah, if cannot, then I think it's likely that we come down further to the next horizontal level that's about 788, then followed by near the 760 mark over here. So that's my take on city developments. Okay, then capital and invest. Okay, I think currently pulling back after hitting resistance near the $4 mark, which is this downtrend line resistance over here. Pulling back into this trend channel over here. So for now, I think could see some further pullback if we come back to the lows of this uptrend channel. That would be maybe about 375, and 375 would be probably maybe a good place for entry if it actually pulls back to this channel support, because there's this horizontal resistance last time that we broke out of also. Yeah, so for now, resistance wise would be around 390 to about 396, I think, which is this range over here that we actually waited, and then there was a breakdown. So over here, there will be resistance taking place. Okay, Thai Bev. Okay, Thai Bev, I think we are trading outside of this uptrend channel over here for now already. Price wise looks like it's like just sideways for now. So we still see resistance at 70 cents mark to 705. Support could be at 68 cents mark. Then further down is at 67 cents mark, based on the swing high last time over here and the consolidation range over here that took place in December last year. So for Thai Bev, I still see some range trading taking place for now. SunPower. Okay. SunPower, I think for now, possible there's this uptrend channel over here. Then there's a possible rising wedge that is respecting for now. So for now, we see some resistance at the 39 cent mark over here. For now, we are seeing some support at this uptrend channel over here. So that's the 37 cent mark. So this level must hold for this uptrend to continue nicely. Yeah. So I think for now, still looking okay, as long as we find some support and continue to rebound, and that will be good for SunPower. Okay, Salesforce. Salesforce, I think we had a breakout of this 165 stubborn resistance over here. Then finally like doing a backtest of, we did a backtest on Friday, then there was a doji candle form. So that signals some indecision at this place. Let's see whether I can rebound off this previous resistance now turn support level. If not, we could be heading a bit more downside to maybe retest this trend line support. That could be about maybe 160. We could maybe test this 160 horizontal level at the same time if we actually break down 165 for Salesforce. Great Eastern. Great Eastern, I think we're trading in an uptrend channel over here. So for now, it could be facing some resistance at $19 mark and $19.10 to about $19.20 is quite a strong resistance. 19.20 was a previous horizontal support over here that we broke down. So that will be resistance over here as well. So for now, I'm leaning towards some pullback to take place. Then the immediate support will be at short-term swing high is this 1880 level over here. Then further downwards is at 1860 over here. Yeah. So if it actually pulls back to maybe this level and the channel support, then that might be a good place to for some possible entry for Great Eastern. Okay, some of the names. Franklin. Okay, Franklin, I think pulling back for now. So we here the resistance over here 119 to 120 is still pretty strong. We tested, then we looks like it's coming down again. Then the possible pullback downtrend channel over here. So if 110, 111 is the support for now. So if this can't hold, then it's likely that we come back to maybe fill this gap over here 105 to 107. So that's my take on Franken and Best World. Okay, Best World, we hit the swing high of 255, the swing high resistance last time. It started to, there was a big down day last week. Currently looks like there's a bounce that's taking place for now. So for now, I think resistance wise would be found maybe at 245, which is this horizontal level over here, which was a support over here. Then further up will be around 250, 251. So that's my take on Best World for now. Looks like maybe a bounce, maybe a retest, then possible sideways for now. Looks like there's some sellers, strong selling taking place around this level that people want to take some profits. AEM. Yeah, I think AEM not very good for now. We actually broke down this ascending triangle pattern over here at 342. So for now, short-term wise, you could be retesting some swing low at 2326 region over here. Yeah, so that's my take on AEM right now. Then 326 will be a previous resistance level that broke out of over here. So that could be some support over here as well. Yeah, hop bar. Okay, hop bar looks like entering into the resistance zone. So over here last time, 10.50 to about $11 over here, we see some strong support taking place. So over here there will be resistance that's got place. Yeah. So anticipating some pullback for hopper over here. Then the strong support would likely be near 980 to about $10 level over here. So this was a previous strong resistance. So if it does a back test, then there will be a good place for some support for hopper. Okay, let me see what's the other questions. Okay, YF, thanks. Yang Zhejiang Financial. Okay, so for Yang Zhejiang Financial, I think for now we are pulling back. What's this trendline support over here? So maybe at 355, we could find some support. Then if you use the Fibonacci levels wise, I think it's also the 50% retracement mark. Then further pullback could be seen. If you do a further pullback, I think support could be seen at 34 cents, which is a 61% retracement level. There's also this range support last time also. So that could be this will be the next support level. Yeah. Then resistance wise will be 37 cents over here, which is this horizontal level we broke down off over here for Yang Zhejiang Financial. Okay, Maple Tree Industrial, okay. Looks like we're doing a possible test of this wedge breakout. So maybe some support over here at 227. If you fall back underneath the wedge, then we'll be looking at this trend line over here. Then that would be maybe about 223 for some support. Yeah. So all the REITs are like pulling back for now in general. Yeah, SIA for now I'm short-term bearish given that we broke down this rising wedge pattern. For now some support could be at 578 to about 582 over here, which is this consolidation support. Then further, if you pull back further wise, I think the next support area could be at near 567 over here, which is this resistance we broke out of. Yeah, and it was a previous swing high resistance in 2021 as well. Then resistance wise for now, probably at 590s to about 592 to about 597 over here for SIA. Okay, then DFI. Okay, DFI, I'm seeing a rising wedge taking place. So that's, for now, we may be careful of a possible breakdown since there is a bearish pattern. So as long as we need to see some support coming at this 330 level continuously and do a rebound, then that will be safer. If not, we could actually see some breakdown, then I think the short-term support level could be at 319 to 320, which is this swing low and the previous resistance that was being broken over here. Then further pullback wise, I think we could see maybe 305. I think if you do a deeper pullback, then that will retest this previous resistance level that was being broken out of for DFI. So let's see how it goes. And Meituan. For Meituan, we broke down this downtrend channel over here. Currently, I think we hit some support near the 61.8% retracement mark at 144 over here. So some support might be coming in at this level. Yeah. Then if it continues to drop, then the next support will be this swing low at near 128, 130 over here. Yeah. So that's for Meituan. Okay, BYD. I think BYD, we are just coming back to this uptrend channel over here. So for now, I think we could see some possible further pullback to maybe retest these swing lows over here at 220, and that will match the uptrend channel support over here as well. Then short-term resistance wise is around 250 to 250 onwards, so about 260 over here. Okay, let me see. Next one, land lease. Land lease for now, I think we are seeing resistance at 74.5 cents. We tested multiple times and couldn't fail to get through. Then if you do a pullback, I think short-term support over here is at around 72 cents over here, which is this uptrend channel support. Yeah. Insurance. Okay, Ping An Insurance, I think we be similar to Tencent. We broke down this trend line support. Currently, looks like we found some support at the $56 mark, which is this previous resistance level, and we sort of bounce over here. So for now, the resistance will be at the $60 mark over here for now, and possible some sideways trading for now. If we actually, let's say we break 56, right, then the next strong support will be at 53 based on this resistance over here and the previous swing high over here. Yeah. Okay, sets. Sets I'm a bit short-term bearish for now, given that we retested the swing high over here at 315. Then we actually broke down the short-term trendline support at 310 over here, and only pulling back. So for now, we're seeing see whether this $3.01 level can support, which is this short-term support over here. If not, the next support level could be at 296, which is this resistance that we broke out for sets. Okay, then straight trading. Straight trading, I think just looks like a range trading for now. So like 240 to about 248, there's resistance. Then support is coming in at about 231, then lower end is about 226, 227 over here. So I expect this range trading that is taking place for about 3 months already to continue for now. Okay, AMD and PayPal. Okay, AMD, I think we are pulling back into this uptrend channel over here for now. So some support maybe at the $80 mark if the channel supports. Then further pullback, maybe $78 might be a support, which was a resistance last time over here. Yeah. Then short-term resistance wise about $86 to $89 for AMD. Then PayPal wise, PayPal, I think there was a false break of this downtrend resistance over here. We currently back underneath it. So for now, resistance at $83 mark for now. Then short-term support wise will be this range support. That's around $76 to about $78 over here for PayPal. Yeah, ST Engineering. Okay, ST Engineering, I think we currently hit some resistance around the 377 to 380 mark, which is this uptrend channel resistance, pulling back for now. So I think some short-term support will range from about 352, which is this horizontal level we broke out of, to about 360. So 360 was a previous horizontal resistance last time in 2021 to start of 2022. Yeah. I expect some further pullback for this stock. Okay, the last one will be what's entry price for BRC based on PA? Okay, let me take a look. Okay, I think BRC bottom, the support is around 180 over here, so that could be a good entry price based on the long term, based on this support that is taking place on the range over here. Then further down, another possible entry could be at 177, which is resistance that we broke out of over here. Yeah. So yeah, I think overall looks like the stock is quite range over here. So for now, I think we'll be hitting some resistance soon at 186 to this 189 level. Given that this was another range taking place over here, then it was a breakdown. So that's my take on BRC. I think that's all from me today. And pass back the time to the rest of my colleagues.
All right, thanks, Zane. Sorry, I wasn't in earlier because I was in the DBS call. But anyway, I think there are a few questions for me. I'll do the SGX one first. Given that Phillip was positive on SGX prior to the results, why is the market negative post results? So I think for SGX, I think as Paul has presented earlier, the main reasons why they were the results were positive was coming from the higher treasury income. So and as well, if you see their net profit, not the adjusted one, it's up 30%, and these are more from one-offs. So if you look at their normalized net profit, it's only up 7%. So it's just a very stable, normal growth for SGX. And I think that just the overall market sentiment might be one of the main reasons why people are not so positive on SGX, and hence the share price has dropped, even though they posted quite good results. Okay, I'll move on to the next two questions. These are regarding, I think, DBS, as the results just came out. So for those who are not savvy to the information, so DBS posted pretty good results, mainly from their higher net interest margins and net interest income, which is expected. But then there was a dip in their fee income, a continued decline in fee income, and also their loans growth was mid-single digit, which is also what they were guiding and what the market has been expecting. So, however, their dividends were very high. They increased their quarterly dividend to, I think, it's 42 cents, and also had a special dividend of 50 cents. So this totaled to 200 cents. It's a dividend yield of about 4.05%. So yeah, the results were very good. However, I mean, the questions were why did the price drop today when you reported good results? And the other question is similar. Why are banks, especially DBS, down when results seem good? Okay, so I think although they did publish and report good results, I guess the slowing economy as well as the lowered loans growth might be a worry for investors. And the second reason is also, I mean, going into 2023, we would not expect such huge growth in their net interest margin and net interest income, because the interest rates are quite flat going into 2023. So these two are I think, major concerns going into 2023. Yeah, so I hope that answered everyone's questions. I think we've really reached the end of the webinar. I think we've answered all the questions. So I think we just end the webinar here. Thanks everyone for joining us today, and we'll hope to see you next week. Okay, thanks.